All right, so welcome back to the Trader's Mindset. I think this is chapter 8. We have gotten to, I know we're kind of a day behind on our classes. Yesterday we had the Spectrum was upgrading our infrastructure, which we have needed so desperately for the last several years. They were on my side of the neighborhood yesterday, so we had some intermittent issues. We pushed everything back a day, so we're getting started right now. So today we're going to talk about managing expectations, and this is huge. And it's something that, and ironically, this is something that I was dealing with this morning. It snuck up on me, and I had to catch it and try to get things back in perspective. But before we move on, we're gonna kind of review a couple things from last week, or week before last. When put together right, confidence can be your most trusted tool. You really can't do anything without confidence. If you're focusing, and here's a good test. If all you're focused on in your trading is trying not to lose, you have zero confidence in your ability. And you should not be trading. I'm going to say that again. I don't care. Some people may disagree with me, but I'm going to tell you, things aren't going to end well. All right, if you're focused on specifically not losing, you have zero confidence in your ability to trade, whether you think so or not, and you won't be successful. So confidence has to be your most trusted tool. Now, you can develop overconfidence. And I see that happen very quickly. If somebody comes in, they have several winning trades in a row, or, the market is really, really good, and you end up having a great week or two, and then all of a sudden, you're thinking anything you touch will turn to gold. And that's your confidence tool broken. You don't want that. Okay, we've got to have the same confidence whether we're on a winning streak or a losing streak. It doesn't matter. We have to keep that same confidence, that same focus. You start to get good thinking you're better than thou, and you try to pick tops or bottoms. We try to pick, where the stock's gonna go to and all of that based on technical analysis. All right, that's all we're doing. But we're not getting frustrated and trying to trade the exact bottom or the exact top. Because oftentimes, I'll pick a top and we'll trade through it, $1 or $2. And if you're stuck on picking tops and bottoms, you're going to jump back in. And you're going to kind of mess yourself up trying to get that last dollar so that you can be perfect. And that's not what this is about. Okay? And if you think with 100% certainty which direction the stock is going to go, you're in bad shape. You've got the wrong mindset. What I look for and what I try to tell you is we're looking for the most likely direction that the stock is going to move based on technical analysis, technical and price action analysis. We use that information to give us an idea of where the stock is likely to move. That doesn't mean it's going to move in that direction. Case in point, hold on one second. I'm going to tell you. Case in point. Got to get to. All right, so this morning we traded. Let's see what trade didn't work. Meta. Okay, we traded Meta. Okay, look, we confirmed, taking out all of this. So all of the price action and everything kind of told us that we would sell off, and we had some room down to like 488, but it didn't happen. So I'm not. If I felt that I knew with 100% certainty that this stock was going to go down, I would be highly disappointed and upset. Well, was I disappointed that we didn't go? Yeah. But I try not to lose my cool and to be overconfident sitting here holding it, past confirmation. And that's happened to me before. So we don't want to know with 100% certainty, or think we know with 100% certainty which direction our stock's gonna go. We don't want that. We have to accept it and move on. But that doesn't mean I don't, for me to lose confidence in my ability. You know what I'm saying? So I should have continue to have confidence in the strategy and my ability to trade and the setup, regardless of whether I'm on a winning streak or a losing streak, or it just didn't work out. It's crucial to be patient and to understand your stock's price action very well. Okay, yesterday we were patient, and we were able to make it back. We were able to make, our losses back. Let me see if I could find that one. Should have had this already set up, but I didn't. Alright, so I posted this on Twitter last night. But you can look. Here's where I just got nailed on Nvidia here. But we were patient. We waited, it broke out. We got mega trade here on the pullback, added back. Nailed some good trades here. Okay, here we pulled back, got stopped out at break even on like the last 50 shares or so. We bounced, so I was able to buy here. Guess what? We didn't even lose the 50. I mean the 50 period moving average. We didn't even lose this. So price action, even though we pulled back, price action is still telling us this trade is still in play. Look at how it trended. It was just a matter of being patient and then going into the close. Look at what happened. And we were able to erase a mega loss and end up making $1,300 on this. And it's all about patience. Having confidence in the process, how well you understand the price action, technical analysis, And yeah, it does. Having confidence doesn't mean it's going to work every time, but you're able to stay in the trade and allow it to work, and that's how you make money. I liken it to, knowing the price action, getting a feel for it, like the lyrics of your favorite song or the beat. You know the rhythm, and you just flow with it. And then that's what makes it look like it's so easy. That's what, some people tell me, well, you make it look so easy. I'm just dancing with the rhythm. That's all I'm doing. But all of this will help you build your confidence in what you're doing. So trading with confidence is all about being familiar with your stocks, your process, everything you use to get you there, how you find stocks, how you vet them, your trade planning. All of this is enhanced by your confidence. But you never want to get to the point where you're overconfident thinking you can't lose. Okay, you don't want to get to that point. And thinking you know better than what the price action is telling you. Alright, so today we're going to talk about, again, managing expectations. And our expectations are our own belief of what's going to happen in the future. Okay, that's self-explanatory. Using our knowledge and experience, we tend to project these beliefs. But expectations also bring emotions into the process. And this is what causes us to make these, big mistakes, have error in judgment, and, all of that. But we expect our beliefs and our expectations to be right. If I predict something, I expect it to be right. You'll feel great when you're right, but you'll feel deflated or defeated if they don't. And that's what we've got to get out of. We definitely need to have expectations. If we didn't have expectations, how could we plan a trade if we don't have any expectation of where the stock's going to go? We should expect it to either go up or down. What's wrong with that? And then build our plans based on if it goes up or if it goes down. We have to build a case for a long potential trade and a short potential trade. Oftentimes the market will set up and be set up pre-market for a long, and we end up taking the stock short. Or it sets up for a long and we end up taking it. It sets up for a short and we end up taking it long. It happens. But managing our expectations and understanding what can happen is going to help us. And not worrying about being right or wrong. Okay, if we say, the stock's either going to go up or it's going to go down, we'll never be wrong. So we don't need to worry about that. We just need to lock in and read the price action. Okay, we've got to be careful about our expectations, because nothing else has the potential to create more unhappiness and emotional misery than an unfulfilled expectation. Every trader experiences some degree of anger, regret, disappointment, dissatisfaction, or frustration when their trade doesn't turn out the way they expected. It happens. You know, if my trade doesn't work, yeah, I'm disappointed. Um, like this morning, we weren't getting any follow through. I was getting pissed off. But I had to recognize that and kind of flip the script. But every trader is going to experience this. But we just have to be careful about what we expect. Now, I've talked to a couple of traders recently, and I know the big push is for traders to trade with prop firms or funded accounts and all that. That's the big thing now with traders. But what these traders don't realize, yeah, you're not trading your money. So that takes a lot, a part of the stress off of you. But you still have to be able to execute in this environment. So it doesn't matter whether you're trading your money or his money or whatever, you still have to execute. And, you still have to manage your expectations no matter what you do. So here's a nice quote from Mark Douglas. Keep in mind that an expectation is a belief projected into some future moment. Since we can't expect something we don't know about, we could also say that an expectation is what we know projected into some future moment. This guy is smarter than, sometimes what he says kind of goes over our head, because he was kind of smart about that way. But, we have to understand that expectation is what we project. It's a belief that we project. Okay? And again, by us projecting it, we're going to be connected to the outcome. And that can cause emotional distress. Okay, we're naturally programmed to avoid physical and mental pain. That's a given. Just like if when we're little and we touch a hot stove, we're not going to do it again. Okay, we're going to program ourselves to stay the hell away from that hot stove. If we, do something that hurts us or that causes us pain, we're going to do everything we can to avoid it. So to avoid the pain of having wrong expectations, you subconsciously block any information that will invalidate your idea. And how that presents itself is you're in a trade and you establish a level that you're going to use to get out of your trade. But you start thinking, I don't want to be wrong, or subconsciously you don't want to be wrong, so you start looking for other things on the chart. You ignore what the chart and price action telling you this is not going to work, and you try to find another level or something else on the chart to give you hope that your idea is going to work. You usually rationalize, make excuses, belittle the significance of conflicting information, and sometimes even straight up lie to yourself just to make you feel good about what's happening. These are things that happen in a trade. I'm sure you've experienced it before at some point. You may have experienced it today. But all of this happens because we have unrealistic expectations. We're expecting to be right all the time. Now, we should expect to be right most of the time. Because if we're looking at our trading and, we're not in the mid to high 60%, win rate, then something's wrong somewhere. We've got to fix it. So, that's a realistic expectation. But if we're looking for 85-90%, then we're going to be chasing an elusive dream, and that we probably will never get to. Now, can we do that? Can we have a 80% win rate in a week? Yeah, you can have it, but you're not going to have that over the course of a month unless you're severely limiting your trading and you're not allowing your trades to work the way you want them to, or that they need to, the way you can make money. Because I've seen people that have forced themselves to have a 90% win rate because they were cutting trades off because they didn't want it to go against them, but they weren't making any money. You have an 80% win rate, but you're negative for the month because those trades that immediately went negative or against you, you just let them keep going. Whereas the trades you got in, and let's say you immediately got 40 cents and you took it off because you wanted to be green, it doesn't work that way. It doesn't work that way. So you've got to make sure that you have a realistic expectation of what's going to happen. Okay, our goals should be short-term, focused, and realistic. I'm talking about day trading here. That's what we basically do. Even if it's an all-day hold or a longer-term day trade, this is a short-term goal. And they have to be focused and they have to be realistic. Our profit targets are based on price action and technical analysis. If you come in with unrealistic price targets, you'll probably never get them, and it will be really frustrating for you. Okay, so likewise, that's our trades. Our personal goals. Okay, our personal goals, just like our trading, should be short term. Should be focused and realistic. Okay, you're not going to come in and immediately start making money. You have to develop not only your process in trading, but your mindset. Even these guys that came in thinking that they could copy, their teachers' trades, have realized that it's really, really tough. Okay, they've realized that it's really, really tough to do. It's tough because of the mindset, the mental thing. So we want to set small, attainable goals at first while you're developing into your trading self. Just like when we first start trading, taking trades, we set these small targets, small goals for us to achieve so that we can build our confidence slowly in the right way. We want to have our expectations set the same way so that we're managing them. We're not looking at, trying to beat the law of averages. Okay, there's nothing wrong with having goals and expectations, but as long as they're realistic, we won't have any issues. We have to be realistic. And if you have no idea what realistic goals you should have, then that's when you start talking to people who have more experience and that's been there, done that. So managing goals and expectations to maintain a healthy and a sustainable approach to the market is crucial. But unrealistic goals and expectations can lead to frustration, emotional distress, and poor decision making. Now, I'm not going to say last week I was suffering from unrealistic goals. I wasn't. I was dealing with outside forces that were interfering with my ability to focus on trading. And that's something that we talked about prior. But when you feel yourself getting into, having unrealistic goals and expectations, you're getting overly frustrated, you're really emotional, you're making bad trading decisions, that's when it's time to take a break. And there's nothing wrong with it. Just because you might have missed big trades or something, there's nothing wrong with it. Look at me. I missed a big trade on Nvidia and a couple of other decent trades. I just missed them. It's no big deal, because I knew for me to come back next week and to really make money, I needed to do it. All right, so while it's good to set big goals of making big profits quickly, it can harm your mental well-being and overall trading performance. All right, a lot of us like to set these big, illustrious goals and work towards them. But you got to understand, if you put too much into it, it's going to derail you. All right, so some of the dangers of having unrealistic goals. Number one is extreme emotions. Most of us, if not all of us, have experienced extreme highs and lows in trading. The problem with unrealistic goals is that when they fail to produce, it can result in frustration, disappointment, self-doubt. But on the other hand, without some significant goal, your achievement may not provide a sense of fulfillment or motivation. All right, so it's a double-edged sword, and that's why it's important to manage this and to understand the limitations to setting goals and your expectations. All right, selecting the right goals takes experience to understand what is achievable. And that's what you deal with a mentor for, or somebody that's been there, done that can explain the journey to you. So again, bad decision making. Unrealistic goals can lead to impulsive and irrational decision making. Traders may take excessive risks or deviate from their plan to achieve their unrealistic targets quickly. Like if somebody comes in and says, or you hear news, let's take Boeing, for instance. Boeing had a lot of bad news that it had been dealing with, either directly or indirectly. And you could come in and just say, I'm going to throw caution to the wind and short. And you get in and it starts to work, and all of a sudden news comes out again, that proves a lot of the previous report was false, and the stock rips against you. Okay, you did something that's not in your plan. Okay, you made a really bad decision. Okay, and it breeds more, because after that one, you're going to continue to take more risks. You're going to continue to make worse decisions until you just can't stand the pain anymore. Okay, and that's what happens. That's what happens a lot of times when we hold on to stocks too long. only thing that gets us out of it is we can't stand the pain anymore, and we kill it. And that's bad decision making. Yep, I feel like I came back from my break more focused, calmer, and it shows in my trading. But sometimes you just have to do that. You have to do that so that you can stay on the right track. Lack of patience and discipline is another danger of unrealistic goals. Trading requires patience and self-discipline. I think we proved that to ourselves time and time again. Unrealistic trading goals often lead to a lack of patience, as traders expect immediate success and immediate profits. Okay, it's like a lot of traders who are trading small size. They're expecting to make money. You can't make money with small size. The kind of money that you're looking for is not going to be made trading smaller sizes. You can make money, you can grow your account, but it's not going to be as fast as you think or you want. Okay, that's what hurts a lot of people. Is they're saying they're trading a couple of dollars and they want to see these profits, when in reality the math doesn't add up trading smaller size. It just doesn't. So you can't have these unrealistic goals, profit goals, at that point. The goal that you should have when you're trading small is to gain confidence in your ability to execute consistently and accurately, and work off of 60, mid 60s on up percent of a success rate. 65, mid 60s on up success rate. Because even if you have a 70% success rate and you're trading like 25, 50 shares, look, you're not going to make a lot of money. Okay, it's going to feel like you're trading break even. And basically you are, because you're not risking anything. So you're not going to make anything. And then, so you look at your accuracy, because that's what we're perfecting. Because once you get that and you see your confidence in that, then you're going to be able to trade with larger size without even thinking about it. Just come in and execute, and you can start rolling up some profits. Okay, it's a process to develop the right mindset. And this is just one of the links in the chain. So what happens when the desired results don't come as fast as they want? They typically become discouraged and give up, and it just leaves a nasty taste in their mouth about trading. Then you've got the repetition of the bad behaviors. When this situation happens over and over again, feelings of disappointment and frustration can compound and evolve into anger and resentment towards yourself and even the market. If the market's not following through on any of your trades, there's absolutely nothing you can do to change that. So getting mad and frustrated and resenting the market, like I was on the verge of doing this morning, you have to, pay attention to that. And when you start to feel it happening, take a chill pill, take a break. Because you don't want to repeat the bad behaviors that you've worked so hard to eliminate, just because you are not reaching the goal that you have for yourself. All right, so how do we fix that? We set realistic and measurable goals. And all of you that I've had one-on-one mentoring with, and we've talked about this, I told you what you should be measuring your goal on. Some of you can't break away from the P&L and think that the P&L is what determines what you're doing. No. My cats have made probably more money than you guys have, and they have absolutely no idea what the hell they're doing. They just accidentally stepped on the damn keyboard or my mouse, and because I was able to be calm, be cool, be collected, and zoom out and look at the big picture, I was able to, make something out of it. Okay, but you can't base it on P&L, because that money was not made from what I do every day. And if I came in every day and told my cat to walk across the keyboard, just put me in a stop, and then I go to work, that's not going to work. That is not a viable strategy. So whatever you do and whatever you're measuring your goals on, it has to be a viable strategy. And then on top of that, you're gonna have to execute. And your measurable goals should be based on how well you execute. Now, if you're executing at the right level, and your success rate is high on you actually executing the trade plan, and then you start looking at your profits and the profits aren't there, then you can start looking at how you're implementing it. But the P&L is the last thing that you look at when you're trying to set up your goals. Because anybody that comes in trading their P&L is setting themselves up for a really hard road to trading success. So your goals should be specific, achievable, and aligned with your trading strategy and risk tolerance. Focus on factors within your control, such as following your trading plan, executing trades with discipline, and managing risk effectively. The reality is, when we're trading, the only constant variable that we should be able to control is us. If we could come in and execute the same every time, we're the constant variable, and we can control it. We can't control the market. We can only react to it. Stop. Okay, we can only react to it. Stop. So we have to be the constant variable in executing our trade plans perfectly every day. So you want to break your large goals into smaller ones, then divide your goals into smaller, manageable milestones. This is when we're looking at your overall trading. This approach helps track progress, provides a sense of accomplishment, and it keeps your motivation high. Then you celebrate achieving these milestones to maintain a positive mindset. Okay, again, keep P&L out of this. It's about you executing. If you do the right things, the money's gonna come. But if you focus on the money and then put doing the right thing second, you're not gonna get anywhere. You'll get to spinning your wheels, but that's about it. You'll be drifting. So that's what I want you guys to really understand when it comes to this. All right, so in trading, managing what we expect is of utmost importance. I did not say remove expectations. Okay, I specifically said manage expectations. We've got to manage them. How do we do this? How do you work through all of this process? This is why mentoring is so valuable, a commodity in trading. This is too big to do it on your own. There's too many things you just don't know. And the people that are coming out left and right every day trying to sell this, sell that, they're not talking about this because this is time consuming. But unless you do it, it's going to be hard for you to be successful. I'd rather do this in the beginning than go through hell and then come back and try to fix it. Sometimes there's not enough burn cream to soothe the burns that you had. So if you remove expectations, you run the risk of not feeling that something is at stake, which can draw your focus away from the trade and your process to other things. On the other hand, if you're able to manage your expectations, you can easily alter your view of the market depending on what price action is telling you. All right, did y'all get that? If you're able to manage your expectations, you can easily alter your view of the market depending on what price action is telling you, meaning you're not going to stay married to a position going against you if you're able to read the price action. And, you're good with technical analysis. You'll be able to listen and have the confidence and the courage to make a decision based on what the market is telling you. You're not, sitting there with your expectations and holding it, saying, I know it's going to go. Doesn't work that way. So there's nothing wrong with expecting the market to move to a certain level. That's what we do. We look at technical analysis, we look at price action analysis, we look at option flow, and we have an expectation as to where the market's going to move to. What's deadly is when you're so stubborn to maintain your view, even when the chart's telling you something else. So learn to let go of the things you cannot control, like the market, and manage those things that you can control, like your expectations and your ability to execute. By doing so, you can make rational trading decisions, which will lead to more consistent and profitable trading. You want to educate yourself on the right things, on the realities of trading. Understanding that you can't make money risking nothing. You have to risk. You can't come in saying, I'm going to risk 20 cents to make $2. It doesn't work that way. Most of the stocks that move $2 are going to pull at least more than 20 cents back beyond your entry point. Now, every now and then you'll catch something that's just going and going and going, and you're not going to get a pullback or a bounce. Every blue moon, you're going to get that. But you're not going to get that every day. Okay, you're not. So don't expect that. Talk to other traders to see what people in similar, what people who are similar to you have achieved. Understand that trading is a skill and it takes time to develop. And that consistent profitability is a longer term goal. Embrace the learning process. I don't care how far you've come, trading is a continuous learning process. Okay, embrace the fact that mistakes and losses are part of the journey. View each trade as an opportunity to learn and to improve rather than solely focusing on the outcome. Emphasize skill development and gaining experience rather than solely chasing monetary gains. Stop living and dying with your P&L. Okay, proper risk management. Implementing robust risk management techniques is crucial for managing expectations. Okay, if you still have your elementary school or beginner risk management techniques, don't expect to make anything. Doesn't work. Okay, it does not work. You need your risk management needs to grow with your trading. Okay, so you want to set realistic expectations for your trading strategies, potential returns, and risks. Okay, use appropriate position sizing. You want to set stop loss orders and diversify your trades to mitigate losses. Okay, that's something that you see me do. I can't explain it all right now, but I set stop loss orders. Once I take profit, my stop's at break even. Okay, I try not to use hard stops. I will write down what my stop's gonna be, and that's my stop loss order. But we've all got to have it. And then we diversify our trades. Just because the market's going up doesn't mean every trade we take must be a long trade. Or the market's going down doesn't mean every trade we take must be a short trade. We have to, go back and forth. It's based on what the chart's telling us. Alright, so you want to maintain a trading journal. We talked about this. It's a very powerful tool. And in the first 90 days of trading, I think we have a session that just covers that. And maybe two of how to journal and how to do it the right way. And what data you should focus on and how to make sure you're using the right data. All of that stuff is very, very important. But it helps track your progress, identify your strengths, your weaknesses, and it also helps give you a realistic perspective on your trading performance if you're honest with yourself. Okay, that's really, really important. Again, focus on the process, not just the outcome. Stop obsessing over profits. Again, you've heard me say that many, many times. There's a reason. It's that important. Stop obsessing over profits and focus on the process and on execution. Emphasize consistency, discipline, and adherence to your trading plan. By focusing on executing your strategy effectively, the desired outcomes are going to naturally follow over time. As you grow, as you increase your position size, unless you put money in, you're not getting anything out. It's just that simple. Alright, so you want to seek support and mentorship, engage with a supportive trading community, or seek guidance from experienced traders or mentors. It doesn't matter who it is, as long as it's somebody that's doing it and you're seeing them do it every day. You can't go by what they're telling you. You got to go by what you see them do every day. Surround yourself with like-minded individuals. that can help give you valuable insight and support and perspective. Learning from others' experiences can help set realistic expectations and navigate the challenges of trading. All right, so to sum this all up, having realistic expectations is vital for long-term success in your trading. Unrealistic goals can lead to emotional distress, impulsive decision making, and a lack of patience and persistence. By setting realistic and measurable goals, embracing the learning process, practicing proper risk management, and maintaining a positive mindset, traders can avoid the pitfalls of unrealistic expectations. Remember that trading is a journey that requires continuous learning, adaptation, and refinement. And I like to use the term improvise, adapt, overcome. I got that from a movie. Can't remember which one. But I think the Marines use it, and it's a pretty powerful phrase here. In the market, we have to improvise and adapt to changing market conditions, and that allows us to overcome them. So by managing expectations effectively, you can foster a sustainable approach to trading and increase the likelihood of achieving your long-term trading goals. So I hope that this kind of digs in and gets you guys understanding how important it is to manage your expectations and how important it is to not use your P&L to help you manage them or to make goals. Very, very important. So I'm going to go ahead and stop the recording because I'm beyond the 45-minute mark. But if you have any questions, you can go ahead and ask. But I'm going to stop the recording here and start getting it uploaded.